Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome back, Jared. And we're not alone this time. We have a guest with us.
We do again.
Thank you.
Johnny Humm, who's the Deputy Head of Marine and Energy at AEGIS London. Welcome on the show.
Thank you very much. Thank you for having me.
And Johnny, you're not here by chance. You've come to unveil a topic that Jared and I have been excited about for a long time, but we finally found somebody who can take us through, help us navigate, to use an intentional pun.
Well done.
The choppy waters of the marine.
It's going to be a pun-heavy episode, I suspect.
Yeah, but so you're an expert in marine and energy, and most of our listeners won't be. So I'm really looking forward to just diving into the whole world of marine insurance and its great rich history, present and future,
especially in the London market, which is sort of the home of marine.
Yep, exactly.
Is there there is a sensible place to start. I was going to say, where should we start? But perhaps we should start with you. How did you end up in the marine world?
Like everyone, I have relatives in the marine space. So my father was in insurance as well. Yeah. So I did some work experience when I was at university, and then loved it so much they couldn't keep me away. Yeah. So I came straight back. I actually started as a broker before.
Nice.
So I did that for sort of 2 or 3 years, and then went over onto the underwriting side and have been doing that ever since.
Very cool. Always on marine as well?
Always on marine. So marine is quite a broad term. Yeah. I guess it encompasses various different aspects. So physical damage, hull, liabilities. I now have oversight of a bit of energy, PD insurance as well. So it's quite a sort of broad range of topics within marine.
And it is a really special space. So I hope if anything comes out of this episode, the fundamentality of the marine market and the fact that everything that's not marine was called non-marine.
Non-marine, exactly.
And ground floor of the Lloyd's building, the marine world. Let's hope that everyone gets that impression from this episode. But what do you think has kept you in marine? What's so exciting about it for you?
I think, as you alluded to, there's no one has any idea what goes on in marine, actually, and that I find really fascinating. I mean, 90% of the world's goods are transported by vessel. It's the most efficient form of transport for that, and our economies just wouldn't function without it. So, and it's just such a varied life. There's so many interesting facets to it. So I just really enjoy getting my teeth into it, really.
Nice.
Well, and in London as well, it's like it's the original sort of product from the London market as well.
Exactly. So it was what Lloyd's was founded on. All the Lloyd's stamps have little anchors on them for that reason. Yeah. We have the Lutein Bell, obviously, that sits in the middle of the underwriting trading floor in Lloyd's. And a lot of the industries that sit around the marine insurance industry and shipping in general, lots of them are based within London as well. So there's a very maritime heavy space.
Yeah. Are you I was going to say sailor, but there's probably like a better term. But do you like boats?
I do like boats. I'm not a sailor per se. We identify as mariners, I suppose.
Yeah, I was going to say, I thought sailor sounded
No, I wouldn't pretend to be an expert sailor, no. But I am interested in ships now, much more than I was before, perhaps.
Yeah. Very cool. So let's try and start just with maybe a kind of disambiguation of what's in the marine bucket, right? So you've got ships is obvious, there's some ships in there somewhere, but if you were to do the biggest umbrella you could, what sort of categories emerge within marine?
I was thinking about this on the way here. I think if you asked our cargo team, they'd just say floaty things.
Yeah.
But it is. I mean, we deal with all aspects of commercial shipping. Yeah. We deal with some pleasure craft, and then within the marine, going into the energy space, we deal with offshore energy assets, rigs, semi-submersibles, all that kind of thing. So, and then on the liability side, you've got all of the third-party aspects of all the risks that we cover, like pollution, the crew, removal of wreck, things like that. So, essentially, anything that can float within reason could be covered by us. We've got weird and wonderful risks like floating casino barges that no one quite knows where they fit within the market. But all the main shipping types you can think of we'll pretty much have a look at.
Cool. And this is just the back of my head thoughts, so it might be completely wrong, but you have inland marine as well?
Inland marine as well, yeah. So that's a sort of slightly niche area. We tend to look at it in terms of blue water, which is ocean-going vessels, brown water, which is more sort of tugs and barges, inland waterways, and then there's a sort of mid-tier, which is green water. And then separate to that, you've got, as you say, inland marine, which is more craft and actually can encompass all sorts of things. And I suppose you've got ports and terminals, which sits on the edge of marine, because you've got some static port assets there. So that sort of bleeds into property a little bit. But anything really associated with the flow of goods from the edge of the port and across the seas is really our area.
It's incredible, isn't it? It makes me just think of all sorts of things now. I'm getting overexcited, like a sweet shop, because you've got that blend with some things, I guess, like as you said, property things. At some point, does a canal fall into your world structurally as well as a passage route that people can take?
Yeah, so I mean, there've been, I suppose everyone will have heard of the Ever Given event on the Suez Canal, where a very large container ship blocked it for 6 days, I think it was. That falls squarely into our remit, but obviously it affects absolutely everyone. It disrupted the global supply chain. I think the Suez Canal Authority were losing $15 million a day in dues alone, just from vessels passing. There were 300 ships blocked at that time. And, England thought it was going to run out of tea at one point, I think. So, it affects the global supply chain hugely, particularly at those choke points, Suez and Panama being the two obvious ones.
Yeah, indeed.
Well, and you mentioned sort of the relationship with aviation, or the sort of adjacency to that, the adjacency to energy. And you see there's like people who write marine specifically, but you can begin to see why marine and aviation is a category for some insurers and marine and energy for other insurers, because there's this sense of the things that are just next to what we're doing with this main book, and you sort of bundle that together.
Exactly, and quite often cargo gets put into that because if you're talking about throughput of goods, a lot of that obviously happens by sea. So quite often you'll see a cargo department within an overall marine department as well.
So what's that we've just touched on tons of the variations, the Coke with lime and so on. But what's the original classic marine policy? To go to the most basic one, you could imagine, what would that be?
I suppose the most basic one is insuring vessels against perils of the seas. So physical damage to the vessel caused by events out of their control. And we will put them back in the position they were before the peril occurred.
Quite literally, ship sinks.
Quite literally. So at a basic level, it's rare actually, or rarer, for vessels to just sink. They're actually quite difficult to sink now.
One would hope, I guess.
But quite often you get, what we see a lot is engine damage, leading to vessels being disabled in the high seas, and then they might have an event after that. They might ground, or significantly recently on container vessels, fires are a real issue. So I would say fire and machinery damage are really the large, the causes of, or the main causes of events. We see a fair amount of collisions. Whenever I speak to friends who aren't in the industry, they can't understand how these things run into each other, but they do a lot. So that's always quite interesting, because then you've got the debate over who's at fault. So the lawyers get excited at that point as well.
I bet.
But there are, I'd say, the instances of a vessel just sinking are actually quite rare, but it's normally as a result of another event.
Because I guess things, I mean, again, we're doing such a wide range of things now. Even just looking at a ship, right? Something could happen in port. I learned this expression a long time ago when I was doing some law, but bottom fouling.
Bottom fouling,
is a thing that can happen to a ship that's left in port too long.
Absolutely. Right? So they have what's called anti-fouling paint in order to try and mediate against that. But yes, if it's stationary for too long, you might look to a reactivation survey or something like that to make sure this thing's seaworthy apart from anything else. And things get caught in the propellers a lot. And this is just on everyday vessels. It happens all the time. So.
And then I guess even just staying in port, you can have things like natural catastrophes coming in and affecting vessels. You can have one that came up a long time ago, steve doors and leaving doors open when the ship goes off.
Yes, that happens, and that can happen both on the vessel and off the vessel, as you say. So we've got to be careful about aggregation, certainly. Although most of our policies have worldwide trading, so there's we can track where these things are, but there's very little we can do if there are 5 of them in one port at the same time. We just need to understand that as underwriters.
Makes sense.
Yeah, certainly human error you alluded to is one of the largest. There's an element of human error in almost every claim we see.
Yeah, and I guess human intentional acts as well, like piracy and war and
absolutely.
So
war is the other, apart from all the physical fortuitous damages. War is the other main sort of line of coverage that we deal in, and obviously that's quite a pertinent topic at the moment. The Russia-Ukraine crisis threw up probably London, well, the world's biggest ever war loss, because you had geographically a trapped sea effectively, and lots of those vessels were unable to leave, so it became total losses by that fact, even if they hadn't been damaged. So that was quite an interesting claim to, and that's still going on, and that really tested the market, both from an underwriting perspective and from a legal perspective. Actually, it caused everyone to look very carefully at the conditions they were offering, and now you've got obviously the crisis in Yemen and in the Red Sea, which is changing by the day, actually.
Well, and you can begin to sense like the history of much of insurance as we know it coming from marine, but one of these concepts of salvage sort of originates from like a ship has sunk or a bunch of the cargo has sunk, but it's a total loss, but we can still go and get it, right? So you're giving the claimant the money, but the insurer has the ability to go and sort of bring stuff back and then recuperate some of the loss that they've paid. You mentioned really interesting, and I didn't know this at all, this idea that you've issued a total loss on a vessel because it's been trapped, but like that should be a relatively easy salvage. But like, how would that work in this, or are you unable to salvage it even though it's sitting there and you could?
It's an interesting question because really it depends on, these vessels need to be operational as much as they possibly can. The engine needs to be running the whole time. So if they're off hire or they're just stationary and not being used, things can go wrong with the machinery. So we, under normal circumstances, might want to get a surveyor on board to reactivate the vessel, restart it from a cold layup. What happened in this instance is that we have clauses in our policies that allow for vessels to be declared a total loss after 6 or 12 months, depending on what's in the policy, if the owner has lost free use of that vessel for that period. So that's what, depending on which ports they were in some were stuck in Odessa, for example. Now, physically, that port you could leave, but it actually wasn't reasonable or practical or a reasonable proposition, effectively, given you could have got hit by a mine or a rocket at any given time. Whereas in a port like Mykolaiv, for example, actually that port needed silt, needed dredging to get rid of the silt so that vessels could physically transit the canal, and that wasn't happening. So they were physically trapped as well as sort of metaphorically trapped. And then you're right, the salvage is, you should be able to just restart a vessel and sail it out. But obviously you've got to get crew there that potentially weren't, have been airlifted out. You've got to see what state the machinery's in. You've then got to get, transit convoys. There are a number of different things that need to happen before you can just sail a vessel away. What we found was that a lot of vessels were actually sold in situ. So the existing owner got paid their total loss and then said, actually, we don't want this anymore. We're going to sell it to someone else who picks it up for a cheap price, essentially gambling that at some point they will be able to sail this thing out. But you alluded to us sort of almost gaining possession of a vessel because it's declared a total loss. Technically, it's ours. What happens in reality is we will decline that notice of abandonment because we aren't ship owners either, and we don't want the associated liabilities with holding an asset in Ukraine or wherever it is trapped. So what we try to do is find a buyer or facilitate that exchange so that the underwriters actually never take title of the asset itself.
Yeah, makes sense. And with I guess so many of these things happening simultaneously to say that one given cargo ship, let's say, right? How frequently are these products sold together? And as an underwriter, would you want to take all of the bits for one? You're doing the whole, but also the cargo, but also the war. Is that too much accumulation? Or is it just a very
good question.
Convenient cross-sell?
No, it is convenient cross-sell. I think so. So what we deal with is Hull I suppose, attritional physical damage and total loss, and they're often sold together, even though they're two slightly different products. One is linked to the other. War, again, is quite often sold within the package, but because the total loss coverage and the war coverage have different loss experiences in the attrition, they sometimes get placed under covers or delegated authorities as packaged themselves, because they have effectively they present differently as risks. But quite often the war is very profitable, particularly if there are breach incomes there, until it isn't. So what people try and do is offset the attrition in the hull account and write the war to balance that out. The cargo, actually, most people treat as separately, because on a given vessel, you're really not going to know. Again, cargo, they'll deal in limits throughout the year in terms of whatever's being shipped, but they won't know what's on a given vessel at any one time. And I think we're a little bit away from the entire world being on electronic bills of lading, for example, and being able to monitor those aggregations. We're looking carefully at the moment to try and understand port aggregation, but when it gets onto a vessel itself, you imagine the Ever Given that got trapped in the Suez, I don't know, 17,000 containers or something on there, there's absolutely no chance of you knowing exactly what's in each one. So
and there's probably never going to be sort of complete transparency, but is data sort of helping to guide sort of certain, I'm sure certain shipping companies are better than others, but how is that data feeding into the information that you use at point of underwriting, and how much do you sort of use that as sort of on a renewal basis, you sort of have better insight as to what actually, like, how do you think about data?
Yeah, I think it's reasonable to say we're obsessed with data at the moment. And I think that's over the last sort of 10 years in marine, that's really become, I would say, a new obsession, in that the data just wasn't available before. And by that, I mean not just loss data, which is becoming better, but behavioral data that we can use for behavioral analytics. And I think the way we're approaching risk and pricing now is markedly different, and has been in the last sort of 5 or 6 years. It's come on a huge amount. We used to look at just static risk factors like, vessel type, age, size, where it was going from and to, et cetera, et cetera. Now we can really understand how a vessel's behaving, how it's being managed. And as I said, the human element is so important in this risk. You need to get under the skin of who's actually managing this thing, who's driving the vessel, what are they doing with it, and what kind of loss experience can we expect from that behaviour. So we're right at the start of that journey, but Aegis is very heavily focused on digital products. Generally, we have a digital division, but what we're trying to do is embed AI into our systems to understand our own claims data better.
Very cool.
And that'll influence our pricing and our decision making.
It's interesting, the way you described it almost made me think of some of the motor innovations, maybe catching up with.
Yeah, that's exactly right. It's sort of telematics, but for ships. Yeah, absolutely. Yeah. And you've got quite a number of people who are going through the Lloyd's Lab at the moment, which is sort of the incubator for tech startups within insurance, or one of them. And a lot of them are focused on gathering vessel data and trying to sort of ship it live, looking at, can we structure policies that aren't just annual? Can we react to certain risks rather than giving all risk coverage? And I think that's all to be explored. It's we have no answers at the moment, but it's fascinating in an industry that's so archaic in some ways and yet prototypical in others. So.
And probably has so much room for change still.
Yeah, absolutely,
as things go. Might be a silly question. Can you, continuing the sort of motor angle, can you get marine fleet insurance? Like, is that a thing, or is it still very much one vessel at a time?
No, it's definitely fleet insurance. So we will tend to look at marine companies are usually structured in quite an opaque way deliberately, just so you never quite know who owns them. But we'll insure owners' fleets or managers' fleets, and normally it's cost effective for them to pool that risk. So we will look at a 10 or 20 vessel fleet more favourably than we might a single vessel, because an incident's just as likely, depending on the vessel's behaviour, etc. But on a single vessel, you're very unlikely to be able to pay it back in any given length of time. So we always try and look at the pool of risk.
Nice.
And then, this being the reinsurance podcast, how does your relationship and the way you think about underwriting risk, and how do you look at the relationship with your reinsurance treaties, and And it's mostly treaty, or is there also some facultative stuff for really large, unique types of things? How does that work?
Yeah, there is.
The marine space.
So the facultative market is probably easier to deal with first up, but that comes in and out depending on appetite. So what quite often people buy facultative TLO reinsurance to take the top sort of top exposures off their books. But that
TLO is total loss only.
Yeah. Sorry, yeah. So but that really depends on appetite from the market. Some people see that as a good risk. Some people say, I don't want to play because it's volatile. And if I get a loss again, I'm never going to be able to pay it back. So that ebbs and wanes depending on people's appetite. From a treaty perspective, most underwriters in the market buy a form of treaty, whether that's QS or XL or both. And I think going back to the Ukraine event, that was an interesting one for us because previously reinsurers had treated war insurance as a sweetener for the rest of the account, take out the attrition. Then of course you get this massive aggregated war loss, which I think shocked people how high up some towers that went, and how little we were able to not necessarily monitor aggregations, but affect them. Yeah. So, we couldn't say to people, you can't go into the Black Sea. We'll say, yeah, we might charge you some more premium, but we've allowed you to go there by the terms of your contract. So, so it's, I think the reinsurance market is getting a lot more involved in how we monitor our exposures. And I think they're just more aware of what's going on. Yeah. And I think the other thing is with larger and larger vessels being built, so the latest cruise ships are $2 billion, and that is a full, not just a London line, that's a global fleet line, and it's going to take a lot of that will expose reinsurers' balance sheets.
That starts to be really Titanic-esque, I guess.
It does,
Titanic,
absolutely.
As an adjective. It's interesting, I think, just sort of diving into that Ukraine piece a bit more, it was obviously a small way that the market felt they could help out a bit by helping support the corridor, right, that was set up for a while. Obviously that's had challenges since then. But how did that come together, watching it from a London market perspective? I don't know if you yourself were involved, but how on earth does it work between getting the reinsurers okay and getting some system set up that the London insurance market will back this corridor?
We were involved, or are involved, and it's a really good question because it takes so many different separate groups of people to come together and decide to do these things. In that instance, it was UK government, Ukrainian government, Ukrainian banking system, all the various port authorities within the places we were trying to, Odessa particularly, and obviously then some naval influence as well. But what I suppose at the heart of it, you have underwriters and brokers, and obviously the people who want to ship grain out of Ukraine, for example, who come together and say, how can we structure a product? And I think London has a good history of that, actually. They'll look at an event and, the first day you're trying to work out what on earth's gone on and what your exposure is. The second day you're working out, okay, how bad is this for us? And the third day you're thinking, what are the opportunities to come out of this? And you've got to kind of put aside the obviously shocking human element that is involved sometimes in a lot of these claims. And obviously a lot of the crew had to be airlifted out of these vessels. They were suffering hugely when they were in port at the time, and it must have been unbelievably scary to be on those ships. And the other side of what we do is facilitating, their escape from those areas. And it's great to be able to contribute to something like that. But ultimately, Ukraine needs to export its grain, and we need to be there to facilitate that. So it's exciting to be able to be involved in something like that.
Yeah, and speaking of exciting, you did mention a $2 billion cruise ship already. So most people who are not mariners, will have a fairly limited library of vessel types to draw on.
Yes.
What are the weird and wonderful vessels out there that you see, that maybe people don't notice when they're down their local harbour? So
I suppose just starting with the cruise ships, I'm always amazed that they float apart from anything else. They're just extraordinary things to look at. But some of the latest vessel design are really focused around propulsion. So you've got a lot of exploration into fully autonomous vessels at the moment. You've got electric fully electric ferries being proposed, in Scandinavia, various other parts of the world. I suppose some of the more interesting ones are things like, seismic research vessels. We insure a fleet of diamond dredgers off the coast of Africa, so they literally hoover up the fluvial deposits they bow up tracts of land and literally dredge the ground and search it all for diamonds. So they're pretty fascinating to look at. Things like pipe layers, you think about your fiber optic cables that are laid across the sea, they have to get there somewhere. So those things are incredibly complicated pieces of kit.
Are the cables themselves insured as well, I guess?
They're not insured by us, but they are insured. So cable laying is a sort of very specialist subject,
I bet.
Both in terms of the lay and in terms of the operation. But they still have to get there. And then I think some of the other interesting assets are the vessels involved with the sort of quasi-energy space, like there's a huge amount of investment going on in wind farms at the moment, so the wind installation vessels are always interesting. You have vessels that are specifically built just to carry the blades of these things out to the areas they're going to be installed. So there's a lot of tonnage out there that's weird and wonderful.
And is it just size that matters, or is it because obviously you've got some of these massive vessels that are very low on people, whereas others, you've got a cruise liner with thousands of people on it. Is one of those a much riskier potential claim because, if all those people drown, that's obviously... Yeah,
I mean, if a load of Americans drown on one of the cruise ships, you've got a problem. But I think, ironically, that's probably one of the safest risks, touch wood, that we look at, because they are carrying people. So I think the controls around the carriage of people as opposed to goods are far more stringent.
Makes sense.
Which does, and it's often how, things like we see inquiries for shipping radioactive material, and on first instance you might think, oh God, that could be a horrible thing. But actually, again, the controls around shipping that stuff are so tight that it becomes actually a reasonable risk from a liability perspective. So size does matter, yes. I mean, really size along with trading area is really important. We look at things like unique port calls. So if a vessel's on a line of trade between two ports that it knows very well, I suppose, and you have pilots at each end, the chances of them getting something navigationally wrong are lower. Whereas if you're calling 30 unique ports during the year, you've never transited them before, it's quite literally, right, you approach the port and you're being told how to get into it. It's not always that easy. So
super interesting. When you look at sort of the spectrum of hazards, you have everything from things like pirates in certain parts of the world. You have terror and war and all that. You also have a warming ocean, which is becoming increasingly volatile. Albeit you mentioned ships don't really sink in the same way. A more active ocean probably isn't in the aggregate good for the marine environment. Like, how do you sort of think about the various exposures that you are dealing with and how to help clients mitigate against them, or also underwrite against them?
Yeah, it's I suppose vessel navigational issues are becoming, as you say, depending on which part of the world they're transiting, becoming more and more interesting to deal with. So one of the things we're looking at the moment is the polar route across the top of Russia, and obviously as the ice recedes, those shipping lanes will essentially open up. And at the moment, you still need icebreakers and convoys to get up there, but it's not inconceivable to think of that ice clearing to the extent that vessels can transit in what is a very fragile marine ecosystem and biodiverse. What effect does that have, and how can we mitigate that as insurers? What does a liability claim look like? What does a salvage claim look like if a vessel sinks or gets into trouble up there? So all of those things we've got to have a look at. I think climate change is having an effect on river levels. So you were talking about inland marine. That has an impact when a lot of the European rivers are running low last summer.
Yeah, the Rhine and everything.
Yeah, the Rhine, exactly. So that had an impact on commercial shipping because vessels couldn't load more than something like 25% of their capacity because they couldn't transit the waterways because they would be too heavy and they literally hit the bottom. And then I suppose the warming ocean increases the chance of catastrophe losses in the form of hurricanes. So most people believe that obviously it depends entirely on the prevailing weather conditions, but the more heat you've got in an ocean, the more likely that hurricane is going to gain more power, and particularly Gulf of Mexico. that will cause us a problem eventually. So the honest answer is we've got to try and monitor our aggregation very carefully and make sure people have got the proper plans in place to avoid those kind of hazards wherever possible.
Yeah.
But they're sometimes unavoidable.
Yeah.
And how are all these various trends? You've got the new data coming in, you've got geopolitics in some parts of the world, you've got warming oceans, etc. How has the rate environment been changing over the last decade or so in marine?
Yeah, it's changed. I suppose in a decade, actually, it's probably quite a good time frame, because 10 years ago, we were really getting into quite a soft market. And from 13 to about 17, the market really bottomed out. And at that point, in 17 into 18, Lloyd's took action and said, you guys need to have a look at yourselves, and the results aren't good enough. The T-risk code, which is the attritional hull claims code, essentially hadn't made money in 10 years. And a lot of people pulled out, a lot of underwriters lost their jobs. It was sort of straightforward maths, really. It just wasn't making sense, even when you lumped in war and total loss and various other bits and pieces like ship construction that we could write. So in 18, the market really changed. And the difference this time round was that a lot of the other classes changed with it. And I'm not saying marine led that, but the interest environment, the wider perception of insurance as a place to make money, I think changed. So lots of capacity providers pulled out, lots of retro underwriters pulled out. The reinsurance got a little harder, although that probably didn't really happen until 22 around then. So from 18, 19, 20, 21 were much harder years. I think people suddenly discovered they could negotiate a bit harder than they were before. And the results bear that out. Both in hull and in cargo particularly.
Very exciting. And I feel like we're getting towards that part of the episode where we've covered most of the sort of must-cover topics, so we could maybe have a bit more fun. Have you had any very weird risks that you've had to insure in your time as a marine, or had to place maybe as a broker
Actually,
before?
well, we did. So one of the risks we insured recently was a vessel called the FSO Safer, which was a laden tanker sitting off the coast of, I think it was sitting off the coast of Yemen. And essentially this thing was an accident waiting to happen. It hadn't been looked after at all. No one had been on it because the local authorities essentially were saying it's ours, and we own the oil, we own everything. The UN got involved to try and mitigate that, and a broker essentially had to try and corral everyone together to cover this thing from a hull perspective, but also a potential salvage, removal of wreck, and empty all the oil out of it as well. So that was a fascinating project, and thankfully has gone through now, and all the oil's off, and the vessel will be scrapped. So it's gone very well. But that was a really interesting project.
Yeah, no, I bet.
How do you see like the sort of the marine market evolving? Especially we talk about sort of data, and you can track fleets in real time. Obviously, the motor environment, as Ben was alluding to earlier, has shifted to at least offering like pay-as-you-go driving, car insurance, and these. Are we seeing a similar route in which we can do something like that marine?
Yeah.
Like InsureWave was kind of doing some of this. Like, where do you see that kind of going?
Yeah, it's fascinating. I think first and foremost that the industry has to embrace data in a way that it hasn't really got accustomed to yet. We're working on it, but to my mind, if you look back 20 or 30 years in the Lloyd's market, for example, decision speed was very quick. Was very fast, but on a low database. And then as data started pouring into the industry, I think the decision speed started slowing. And I think what we're trying to see now is that once that data enriches our underwriting decisions, we need to build back up that decision-making speed so that we can start to offer those more innovative products. But without that data, things like pay-as-you-go insurance just effectively just increases volatility in your book. So we need to know exactly the claims trends that we're looking at in order to be able to sort of price those products appropriately. But yeah, I think the industry does need to evolve, and there's so many places we could do it.
Yeah,
I guess you could even reward some vessels for not going to more dangerous ports at more dangerous times of the year, that kind of thing.
I think one of the biggest, I suppose, influences on vessels at the moment is not underwriters or insurance at all. It's the effect of the IMO and the targets they have for emissions controls and efficiency of ships generally. So ships are monitored on their own efficiency through various measures, but those are increasingly going to be made public. They'll increasingly have impact on whether they can get mortgages, for example, which obviously there's a huge ship financing is vital to the industry. And if the banks start saying, you must fall within these controls, otherwise we're not going to lend you money, then that really does impact the industry. So I think there's a lot around fuel technology, propulsion technology, ships efficiency generally, even things like rotor sails that will start having an impact. And as underwriters, we've got to react to that. Does this present different risks? How do we mitigate those? How do we price effectively for them? If you reward people who are sort of doing it better, inverted commas, you're making the assumption that everyone else is priced correctly, whereas we would argue marine insurance hasn't made a lot of money in a long time. So is the base price right? And I think that's what we're permanently trying to challenge ourselves to find out.
It's interesting, isn't it? Because you've got, I guess, this context where seaworthiness for older vessels might be well proven, but they're also old. And
yes, exactly.
So you've got this old world or global fleet of ships where maybe they're all a bit old and more polluting than we like, and then you've got these newer vessels which, as we saw in the aviation world recently, the doors might randomly fall off if you're not careful, etc.
Exactly. Bolts missing.
At least we know the old one has been doing the same route for the last 20 years. So how do you think about, I guess, the global health of the marine world at any given time?
I think we look very carefully. I mean, I think it was the IMO have come out with a target for 2030, and something like out of 65,000 vessels that fell into that, I think 20,000 would need to be retrofitted with greener technology to even qualify to go through that 2030 target. So, and that's an unbelievable amount of yard space in actually not a very long, got 6 years to get there now. And those yards will already be taking bookings 3-4 years in advance for builds and or work. So there's a huge amount of work to do to get to whichever net zero target you look at. Shipping is often misconstrued in the press, I think, as this sort of big polluter. Yes, absolutely. A large amount of the world's emissions come from shipping, but it's also incredibly efficient because of the volume of goods being moved around. But there's no question it needs to improve.
Absolutely, and I'm sure that taking vessels out of service to retrofit them and build new ones puts strain on other bits and causes all sorts of unforeseen risks for you guys.
It does. I mean, ship construction is sort of a subject in itself, and that again, that's covered in a slightly separate market, albeit under our remit. But it is fascinating. And there have been some big losses in in that area of the world, in that area of the business as well.
What's the sort of most innovative vessel out there these days? Like if you were to go futuristic, we're really excited and a bit scared of, in the 2030s there'll be more ships like this or more.
I think fully autonomous vessels are the thing that is probably the most exciting but the most scary. Vessels controlled entirely from someone onshore, and how that looks from a legal standpoint in terms of who's actually driving the thing, and what happens if something goes wrong, and what happens if no one's on the bridge to do anything about it. So that to me is the sort of the complete removal of the human from a vessel. I think is probably the most interesting thing that's going on at the moment.
Very cool.
And lots of people are experimenting with them.
And then I guess at the other end you have, as unfortunate YouTube algorithms seem to show to me sometimes, billionaire playthings and so on as well.
Yes.
Well, obviously some super yachts that have private art collections on them, and then also I was looking at something flashed up the other day that BMW had helped make a fully window glass boat that was a hydrofoil flying yacht or something. So you've got an aircraft on sea and boat.
If you want weird and wonderful, the yacht market is a great place to look actually, because people just want bigger and better and different to the next oligarch who's asked for his yacht to be built or her yacht to be built.
But I imagine, a complete guess, but the yacht market is probably pretty small compared to everything else.
The yacht market is smaller, and it tends to have a small number of experts in the class, and then really runs normally on an MGA model rather than a straightforward conventional I suppose, company or market model.
Yeah. Not to put you on the spot to do a perfect global market sizing, but are there sort of big chunks of marine that are obviously, most marine is this, and then next biggest is this?
Yeah, so I think the Scandinavian market since 2017 or so has really increased in size hugely and increased their market share hugely. London, I think, still retains its position as a centre of excellence. And a lot of that has to do with Lloyd's, albeit the company market is very significant now, and there are other MGAs who are, competing in that space at the moment and doing very well as well. So I think what we have, as we talked about at the top of the chat, is that there is a body of marine expertise, not just underwriting, in London that really helps us. And obviously the time zone helps, but you've got lawyers, you've got naval architects, you've got adjusters, you've got shipbrokers, you've got underwriters, and you've got some clients based here. So that's a thriving maritime community that does help retain some sort of body of knowledge, and long may that continue.
Yeah, absolutely.
Does Lloyd's see their sort of expansion into places like Singapore as part of like that marine heritage in some ways? Because those are also like emerging shipping hubs in other parts of the world. Is that sort of a driving force, do you think?
Yeah, it is. And I think, the Singaporean market's an interesting example because it's obviously a thriving shipping community out there as well. And it sort of spoke to the challenges of trying to replicate a Lloyd's environment in somewhere else. And I think in some ways it proved it was very difficult to do, actually, because culturally it just wasn't the same. And some markets, some of the real first movers have stayed there and have really managed to develop a proper Singaporean base. But I think Lloyd's Singapore, as it was first envisaged, probably hasn't done as well as everyone thought it would as a marketplace. Yeah.
Well, and to your point, like it's a thriving marine sort of center isn't just insurance and shipbuilding. It's like all of the component parts that you're going through. It's the legal teams. It's the history and understanding of how these ships get constructed and how all the component parts of that centralizing in London still works really nicely, but it's hard to, transplant that entire ecosystem elsewhere. You can move insurance there, but doesn't mean the rest of the ecosystem has sort of followed suit in the same way. Yeah, absolutely. Super interesting.
Yeah, amazing. Is there anything we've not asked you about that you would want to share with the podcast? Or weird niches we've left stones we've left unturned?
I don't know. No, it's been some very good questions, actually.
No, it's a super, super fascinating part of the industry. I'm sure if a Russian oligarch's boat got stranded and you had to salvage that one, you might take ownership of that.
I'd probably go. I should think.
No, absolutely fabulous conversation. Thank you for joining us.
Good, you're welcome.
Yeah, thanks so much, Johnny. Great to have you on the show.
Thank you for having me.
Thanks, everyone.
Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts.